the reputation of London as the center for bullion trading around the world, and it's been like that for like 150 years. That's going to evaporate, and it's going to hurt the city of London, the financial district, and it's going to hurt the banks, the bullion banks that work with the Bank of England through the LBMA. And I think what's going to happen is that the center for bullion trading will kind of will migrate eastwards to places like Dubai, India, and especially Shanghai Gold Exchange, and even Moscow. They have.
You're watching CapitlCosm. My name is Danny, and today's guest is Mario Eneko from Eneko64 YouTube channel. Mario, thank you so much for coming on the show, my friend.
You're welcome, Danny, and thank you for inviting me.
Yeah, it's always a pleasure talking to you, Mario. Let's go ahead and dive right in. I know you look at a lot of the same stuff we do on this channel. So for you right now, what is front and center on your radar screen at the moment?
Well, I mean, we follow gold and silver a lot, of course, and today gold just hit the all-time high from last week. Silver went up above 34. Now it's stabilizing. But I think another thing that we need to look at, aside from gold and silver, is the bond market. I'm starting to see, especially here in the UK and to some extent in the US, yields going back up. We've had a respite in terms of yields coming off a little bit the last few months since the end of the year. But I think we could see another leg up in long-term bond yields, and that's not going to help anyone. Despite the fact that bond yields had been under control, the stock markets have already come off quite a bit this year, and it might also bring back troubles into the banking sector, because the banks and financial institutions are loaded up with bonds because, as I always say, for some reason, regulators think bonds are safe. So, yeah, I think we need to keep an eye on bonds. Even the Japanese government bond market has been near zero for over a decade. Their yields are starting to move higher. And that's something that we need to keep an eye on as well. The Japanese yen carry trade has been off the radar a little bit, but yeah.
It's very interesting because this kind of goes against Trump and Besant's stated plan to bring down the 10-year. It has come down quite a bit, but now by looking at some of the recent price action, it's starting to pick back up again. What can we infer from this? Is this because of the plunging stock market, or is there something else driving it?
Well, I think Secretary of the Treasury Besant and President Trump, might wish rates were 10-year yield went back down to 2 or 3, but that's only wishing. I think they're going to have a tough time turning the bond market around, because Danny, we were in a bull market for bond prices and a bear market in yields, which is a good thing, for like almost 40 years, from 1981, when the 10-year yield topped above 15%, till 2020, when during the COVID crisis, we touched like 0.3. I think the time when bond yields go, how can I say, are in a downward trend, like when you see lower highs and lower lows in yields, that's over. And we're going to see the opposite now. That is, of course, unless there's a major crisis and the Fed and the Treasury and the government and the administration get back together in some kind of crisis mode, and then they start printing and doing loads of QE to buy treasuries. But then you would see the dollar evaporate even quicker versus gold and silver. So yeah, that's how I see it. And the reason why I think yields are going up is because people are realizing that the Trump administration, despite the fact they're doing some good work in unearthing some corruption in terms of USAID and a lot of like spending that shouldn't be there, it's going to be very hard for them to control spending. I think we've seen in the last month or so that they passed this continuing resolution, which Representative Massey of Kentucky was the only one to vote against it, and he said that it's just like passing the last budget from the Biden administration, and that the budget deficit will increase by over $300 billion this year, about $295 billion the year after, and then about $200 to $250 after that. So, and we saw as well the budget that was presented. It hasn't passed yet and been signed into law. That's gunning for $4.5 trillion in tax cuts, but only about half in cutting in spending. So I'm not too sure. Maybe more in the long term, they'll be able to rein in the deficit and bring the 10-year under control. But right now, it seems to be business as usual. When push comes to shove, even the Trump administration and the Republican Congress will err on the side of spending and borrowing more.
Have the tariffs had a material impact on the stock market, do you think? Because he put them on and he put them back off, and there doesn't seem to be any change in the stock market plunges. It's still continuing to go down. A lot of people seem to correlate that with the stock market, also with the gold price, i.e. these tariffs impacting the gold price. But gold just continued to rise regardless of what he does with the tariffs. So that kind of, to me, that kind of throws that theory out the window, or at least it reduces the impact in my mind that the tariffs are having on the gold and to a lesser extent the silver price.
Yeah, I actually think the stock market was overvalued. I mean, if you look at the Buffett, the indicator Buffett looks at, how Warren Buffett, it's stock market capitalization to GDP, that was at like 208%, which is historically really high. The other thing I would note, when the story about DeepSeek came out, a lot of people thought that was going to be the top for the Magnificent Seven. And I think that's been one of the reasons why. The tariffs, I mean, Danny, we've heard enough. We know it's going to be really disrupted, the tariffs. I mean, just today as we speak, President Trump imposed 25% tariff on all car imports to the U.S. So I think it's pretty much priced in. As for gold, I don't think it has any tariffs, don't have any impact. I think what's happening with gold and silver is that, and this is speculation, of course, is that the U.S. government is having to close out all the leases that it did through the bullion banks, and bring home the gold to Fort Knox. There hasn't been much talk about an audit, even though a few weeks ago, even Trump and Musk mentioned it. But maybe the reason why they've stopped talking about it is because they need to bring the gold back home before they audit it. I don't think it's got anything to do with the tariffs. It's just a lazy excuse, a lazy reason that the mainstream media uses. They blame everything on this tariff situation. Even here in the UK, the finance minister or chancellor of the exchequer, she's blaming Trump and Putin. She's not looking at herself in the mirror and blaming herself. That's what I think is going on.
So why do you think the U.S. is choosing to audit the Fort Knox Reserve now of all times? What's so special? Why is the sense of urgency?
Well, from some of the research I've done and some of the things I've heard people like Besant say, For example, he did an interview which is on YouTube with a YouTube channel, I think in the beginning of November, so before the election and before he was even picked to be Secretary of the Treasury. And he said that his hedge fund's biggest holding was gold. And one of the reasons he was holding a lot of gold is because he thinks there's going to be a Bretton Woods-like realignment, which means the United States, the Eurozone, China, and Russia sitting around the table, could be at Mar-a-Lago, or maybe they'll go to Bretton Woods in New Hampshire again, sit around the table to decide how to fix the monetary system for the world in order to make trade work again. And if you think about what happened in 1971 when Nixon suspended the convertibility of the dollar into gold at a fixed rate, we haven't really had a monetary system. I think it was John Exter of John Exter inverted pyramid fame, who said we have a non-system. So the U.S. needs to have the gold to sit around the table. And I think we know that China and Russia have the gold because they've been buying it, and the World Gold Council has been keeping track of it. And the EU, a lot of the countries in the EU or Eurozone supposedly have a lot of gold. Like Germany has over 3,500 tons, Italy and France around 2,500 as well. So the U.S. needs to repatriate that gold. That's the way I see it. I mean, there's so much gold that's gone to the U.S. that it's affected. It's going to affect GDP going forward by like 2%, which is huge. But people are still talking about tariffs.
If you're looking for great deals on gold and silver, coins and bars from a company that you can trust, then you've got to check out the good folks over at Pimbex. This year, I've really gotten to know these guys, and all I can say is you're not going to deal with a better group of people. They're a family-owned gold and silver online bullion company offering the essentials and more at industry-leading prices while always providing first-class top-tier service. That's PIMBEX.com. And if you're looking to convert some or all of your retirement account into real gold and silver, give Pimbex a call. They'll help explain the process and get you started on the right path. Your support at Pimbex also helps support the channel. So reach out to Pimbex today. You won't be disappointed. And make sure to tell them Danny sent you.
Yeah. I mean, gold just doing what it's been doing this entire time. And Trump's tariffs have come on and come off and come back on again and come back off again. So fascinating points there. Given the recent rise in gold and silver as well, when does silver catch up to the price of gold? Obviously, silver has pretty much tracked the rise in gold on a percentage basis on a 1 year time horizon, but it's still $15 off of its all-time high. When does silver catch a bid, in your opinion?
Yeah, I mean, that's a question that everyone's been asking for a while, but we actually might be approaching, a juncture where it could be very close. I usually used to track a lot and still do the price of gold in different currencies. And I've always noted for the last few years that the Japanese yen was leading the way in terms of debasement, and that the gold price in yen was making all-time highs before all other currencies. And someone pointed out to me recently, a friend, I think, it was yesterday, that he saw on King World News that the price of silver is reaching all-time highs in Canadian and Australian dollars, and that in Japanese yen it's reaching a 14-year high. I think King World News said it was an all-time high, but I actually checked. The all-time high hasn't been broken yet in yen. It was in 1980 around 13 or 11,000 yen. Right now it's at 5,000. So I think that's a good indicator, because silver, like gold, is money, even though it's more of a industrial commodity, but I think it's only a matter of time, and I think we're getting very close to when silver takes off. I think the bullion banks are scrambling to cover their shorts, but eventually they're going to have to run for the hills. And I think as we speak right now, I see silver just around $34 in the spot. And yeah, I think if we break, even if we stay above 34 by the end of the week, I think silver could start catching up very quickly to gold. And I'm not one of those who changes around, Danny. Like if I see silver starting to do really well, I'm not going to get rid of my gold and buy silver. I just buy both all the time, and that's one of the reasons why it has been frustrating holding silver, but having gold is made up for it. So I'm just waiting, and yeah, unfortunately, I can't give you you and the viewers a specific time when silver is going to start catching up quickly.
So what does this exodus from the LBMA mean for the Bank of London? Has the Bank of London, in a sense, kind of defaulted already by not having these deliveries available on hand? You know, I've heard other analysts say that they're just short-staffed and that it's just a matter of personnel not enough personnel being there because they just weren't prepared for something like this. What's your view on this?
Yeah, the Bank of England, I think you meant, not the Bank of London, but
Bank of England.
But LBMA, basically, the Bank of England isn't really a member or trades through the LBMA. They work with the LBMA, the London Bullion Market Association, and there are quite a few. Well, there's some vaults in London. One of them is Bank of England. I think JP Morgan has one, and HSBC. Yeah, the Bank of England, they hold, I guess, gold for some of the bullion banks and a lot of sovereign countries. They hold like 310 tons. That's the only gold that the UK has. Yeah, I think what's going on there is that this gold has been leased out many times over. The gold is also used for the ETFs as well. So basically, you know, I've got here a sovereign. It's as if I've lent this sovereign to all my neighbors around here, just one, and they've given me cash. But now they want the sovereign, and I'm scrambling to find it, and I'm holding them off. So saying, you know, we got to wait until I get some sovereigns. That's what's happening. Not sure it will bring down the Bank of England, even though that would be nice. But being a government institution created by the government, I'm sure they're going to be around. But what's going to happen? The reputation of London as the center for bullion trading around the world, and it's been like that for like 150 years. That's going to evaporate, and it's going to hurt the city of London, the financial district, and it's going to hurt the banks, the bullion banks that work with the Bank of England through the LBMA. And I think what's going to happen is that the center for bullion trading will kind of will migrate eastwards to places like Dubai, India, and especially Shanghai Gold Exchange, and even Moscow. They have a gold exchange. So I think that's what's going to happen. And yes, it's going to hurt the reputation of this city of London. I'm sure, yeah, the Bank of England will still be around, but yeah, it's going to not be as important.
What do you make of the idea that capital flight out of London, and also to a great extent Europe in general? Because you're also seeing this phenomena occur in places like Switzerland. What do you make of this idea that there's this capital flight out of Europe because of fears of conflict and war with Russia? Does that hold any credibility?
Yeah, I guess so. Maybe one of the reasons why a lot of the gold is going to the U.S. could be because of that. I'd like to think that we won't have a war with Russia, because that would be, I can't imagine how it would be. But unfortunately, it looks like the British, especially here, our government is trying to provoke Russia. And I even think the Russians said the other day that the UK, we are the biggest culprits for the war against Ukraine, that we're part of provoking it. So yeah, that's definitely the case. And we're seeing the defense industry in Europe, stocks like Rheinmetall, which is a big German defense contractor, go up like 300% in the last month or so. So yeah, there's definitely talk of that. And don't know if you know the history during World War II, France, they shipped a lot of their gold to Montreal in Canada when the Germans were invading France. Well, just before they did, I think. And a lot of countries, they put their gold at the Bank of England, because England, Britain is an island, so they thought it would be protected from Germany. But there was an incident in 1938, before the war started, when Germany invaded the Sudetenland in Czechoslovakia, that actually the Bank of England allowed the Germans to basically steal the Czechoslovak gold that was held by the BIS at the Bank of England. So history tells us that gold is not safe, even in London, when there's conflict. And maybe that's why also some of the gold is going to the US.
Yeah, speaking of which, this is kind of tangential, but what's your overall take in terms of this war fever ongoing in Europe, between UK and Europe and Russia? The US seems to be dispatching from it, but it appears to be escalating on the European side. The other day, we had a report from France advising its citizens to stock up on 72 hours worth of food and supplies. Now, it's kind of weird, because you should, by default, have 72 hours worth of supplies already in your house. And even if that wasn't the case, you can go 72 hours without food and be just fine. But regardless, I mean, this is kind of like a wink and a nudge, in my view, that for those who are reading between the lines, to kind of prepare for the worst that's to come. Because if they were to tell the citizenry to get 6 months worth of food and supplies, that might spark pandemonium. But, just largely speaking, where do you see this tit for tat thing going between Europe and Russia? Are we going to, if you had to bet $1, would you say we are going to see a war between the two continents? Not the continents, but between Europe and, the continent of Europe and the country of Russia? Or is there a feasible way out? Because they seem serious. I hear every day there's a new headline from a European country talking about how they need to marshal up conscription and bolster up their militaries and things like that.
Yeah, I think one of the reasons why, the big reason why Europe is, banging the drums of war, is because our finances are failing. The banks are failing. And I think it's Gerard Celente who said, when all else fails, they take you to war. And I think what the Europeans want is to really keep that war in the Ukraine going, and maybe go and fight there as a proxy war to try to bring the Russian regime down. It's a very risky strategy because all bets would be off if they did that. We could be attacked by the Russians. So yeah, it's very worrying, and I hope it doesn't happen. But you can see that they're desperate. But on the U.S. side, it seems like they want peace between Russia and Ukraine. But at the same time, we're seeing America beat the drums of war against Iran. So it seems like everywhere you look, there's talk of war, increasing spending for war. And I don't know if you've read War is a Racket by Brigadier General Smedley Butler. Mm-hmm. And in that pamphlet, he talks about how it's a great business for the government, for those involved, for corporations. It's the biggest ripoff that you can have. And we pay for it, the public, through inflation and taxation. And I think, yeah, that's what it's all about. Yeah, they're just creating enemies all over the place because another cliche, another saying is war is the health of the state. And when the state is sick, like it is in the UK, in the EU, yeah, they're gonna go for war.
Yeah, and it's strange because it's also, if you look at it from a historical lens, it's also correlated with rising commodity prices. So whenever you have rising commodity prices, you typically have a big war attached to it. When, World War II, you had supply side inflation. World War I, supply side inflation. So it seems that since we're seeing, I mean, we still haven't really kicked off this so-called commodity super cycle quite yet, but we're clearly in an upswing in commodity prices. And the higher these things go, the more incentive they provide for resource wars to occur. Trump talks about acquiring Greenland and acquiring Canada. And what's the common thread there? Well, in the case of Greenland, it's the rare earth minerals. In the case of Canada, well, it's their vast repository of natural resources. So it seems like we are heading towards that way, and the tea leaves are all telling us that we are kind of prepping for a wartime economy, both United States, Europe, and elsewhere. China's built their own kind of fortress as well within their own borders, from a commodity production standpoint too. So it's kind of weird watching this happen in slow motion and not doing anything about it. But yeah, how do you? I mean, you mentioned the Iran war. I mean, I don't know if you cover this stuff or not, but how close do you think we are to, like I don't want to say a false flag, but like a warship coming down and then mobilizing the public to go to war with Iran? Because it does seem like we dispatched out of the Ukraine war to get into the Iran war. Does that seem to be what you're seeing as well?
Yeah, I mean, I don't really look too closely into it. I speak to some people that do, and they seem to be concerned. And you mentioned the Russia-Ukraine war. Yeah, that would make sense. For America to get that part of the world stop the war there and be able to focus on Iran. And General Wesley Clark made that. He made that, how can I say, interview with Democracy Now! Yeah, no, it was
Democracy Now! Interview where he outlined.
Yeah, he said there's 7 countries they're going to invade, and I think the only country left now is Iran. I know it's taken a long time because I think he said 7 countries in 5 years, but right. And I think it looks like Israel is trying to incite that war against Iran as well. I think it's part of their greater Israel agenda of Benjamin Netanyahu. and that's why they're like equating the Houthis with Iran, right? It's almost like if the Houthis do something, that's Iran doing something. So definitely, yeah, it's definitely worrying, even though for the last 20 years, we've always been hearing about potential war with Iran. But maybe one day it will like kick off, and that would make the commodities a bull market even greater, because I think Iran would block the Strait of Hormuz the blink of an eye, because and that Strait of Hormuz, I think about 20% of the world's oil flows through there. So that would be disastrous, I would say, for yeah, we would see rising prices. We wouldn't see inflation, because inflation is caused by money printing, but we would see, people would call it inflation, and we'd see bond markets collapse. It would be, yeah, it would be pretty, it would be a time when you really want to have your gold and silver.
Yeah, I agree with you. I think the neocons see this as probably the most opportune time to start a war with Iran, because not too long ago you had the fall of Syria, which was the last country on the list to fall before Iran, and they were kind of acting as a buffer between Iran and Israel. But now that they're gone, it appears that now's as good a time as any, especially since Iran strongholds have all been weakened over the last year and a half. So I don't think they're going to let them regroup in time to, to get their axis back in place. So they're probably looking to strike fairly soon. At least that's my reading of it. But fascinating talk as always, Mario. Anything else you want to talk about that we didn't get into before we wrap up?
No, nothing really. Well, maybe just the story from China, which you probably heard, that their insurance companies are now going to be able to invest in gold. I think that's significant. I know it came out in February, but it looks like some of the big insurance companies are now actually dealing in the Shanghai Gold Exchange, and I think that's quite a big story, because there's a lot of money in China, and it shows me that the Chinese government wants not just insurance companies, but also the public to be involved in gold.
Yeah. And then China has like all of these programs. Like, I mean, you've had Eric Jung on your show as well, talk about this accumulate program in China to really incentivize gold buying over there as well. So does China want a higher gold price in your view?
Eventually, yeah, but right now I think they're still accumulating. So I think they're indifferent, and I think sovereign countries don't really care much about the price. They just they just care about buying the physical gold, because they hold it as a long-term strategic asset. So they're not like trading the stuff.
By the way, whatever happened to that story about Russia starting a silver reserve? Do you remember that story from a few months ago?
Yeah, I mean, their finance ministry announced they're going to start buying silver. I think they are one of the only central banks that hold silver, I think. So, but I haven't heard more from it. They're probably still buying some silver.
All right. Well, we'll keep an eye on that. Mario, thank you so much for coming on as always, my friend. For people who are interested, where can people find you?
Yeah, on YouTube at Monaco64. I post a video every day, and I do a live stream on Sunday, 8 p.m. London. And I'm also on X at Monaco 1964 is my handle. And
All right.
yeah, I'm fairly active there too.
Okay. We'll have the links to both of those down below. So be sure to check them out, guys. And if you got value out of this video, be sure to give us a like and comment, "Go Mario Go," in the comment section. If you disagreed with anything we talked about, also leave a comment. I'm super interested to get your thoughts here. Let me know what you think, whether you may not have the answers, whether you have a portion of the answer, or maybe you do have the answer. Drop me your thoughts down below. if anything, it might kind of inspire something in me, in the process. So also check us out over on Substack. It's CapitlCosm.substack.com, where you can get early access and ad-free versions of all of my videos, so you don't have to suffer through these strenuous YouTube ads, and uncensored versions of my videos for the ones that warranted. You'll also get the chance to ask my guest questions for upcoming guests and make recommendations for future guests. And so with all that said, thank you guys for watching. Mario, thank you for coming on, and I'll see you all in the next episode. Bye, y'all.